New self-directed IRA audit risks. Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. On today's AdBits, I want to discuss potential new audit risks for your self-directed IRA with the recently announced IRA bill, Inflation Reduction Act, not individual retirement account, announcing $80 billion to the IRS, not the IRA, to the IRS over the next several years, and talk about its potential impact on enforcing self-directed IRA. So just a quick recap. If you haven't checked out my Adam Talks and my live YouTube video that I did on this subject, expecting about 87,000 new IRS agents, although it will be a net of like 35 or so thousand because they expect good number of IRS agents to retire over the next 10 years. Right now the IRS is supposedly understaffed. They have gone from 94,000 agents to 78,000 agents in the last 12 years. And they feel at least that they're not able to enforce tax returns to the same extent they used to. So they want more money and they got it. And they believe that, and this is what they're able to claim, that for every dollar of enforcement, they can raise $10 in collections. So that's how the Democrats use the 80 billion to create about 200 billion in revenue that will be used to pay some of the programs in the Inflation Reduction Act. So it was really a way to raise the capital so the act would not be determined to be anything that would increase budget or increase spending. So they've used the $203 billion number from audits to use to pay other programs. So now that we know what's going on and what's going to happen in the future, those agents are not going to be hired today. They're not all going to be used for enforcement, but 57% of the 80 billion will be used for enforcement. The rest for technology and other upgrades. They got to hire these people. They got to find them. That's going to take time. So nothing's going to start immediately. How do IRAs get taxed today? Well, right now, there's no IRA audit division. IRA audits are generally pursued through the small business, self-employed SBSE division. IRAs could also be audited through the tax exempt and government entities division. They do have jurisdiction over retirement plans, including employer-sponsored IRAs, so like SEPs and Simples, not individual retirement accounts. IRAs, Roth IRAs, those are through the SBSE, and essentially very fragmented responsibility. You got various IRS divisions, which obviously creates a lot of challenges for examiners. And that's one reason why they don't even release data on number of IRA audits. They believe there's about 2 million self-directed IRA hard-to-value assets. And again, they're not sure of those numbers. But the big issue is really, number one, fragmentation between SBSE and some other IRS departments that even the Department of Labor, it has some jurisdiction over prohibited transactions. They have training issues, education, right? Most IRS agents in the SBSE world, they're focused on individual and corporate tax issues, right? Whether it's deductions, earned income credit, things like that they see on individuals' tax returns, W-2 stuff. They're not used to seeing prohibited transactions, 4975, UBIT. They're not trained in that stuff. So that's number one. Really, believe it or not, their main source of training is publication 590, which is on the internet, which gives you just kind of a summary education on the IRA rules and has very limited information on prohibited transactions and UBIT. They don't even receive any training. This isn't from me. This is directly from the IRS Government Accountability Office report of 2020. So I didn't make this stuff up. They're even admitting that they don't give any training to SBSE agents on prohibited transactions and other IRA information. So they believe that the non-compliance risks for IRAs are small because it's a small population, right? A couple million accounts out of 300 million plus returns they're getting. Small stuff. They don't believe non-compliance is a major issue just because most IRAs are invested in equities where you don't have alternative and non-traditional assets. So you don't have a lot of risk. And that's one of the reasons they're not super focused on IRAs, and why I don't believe IRAs will get much more focus, even with the billions of dollars of new funding the IRS will leave based off the Inflation Reduction Act. They're just going to put it in areas that generate revenues, right? They stated clearly every dollar of money they get, they can generate $10 of revenue for the government for enforcement. The biggest chunk of enforcement is earned income credits. That's people that generally make under 75,000. Low hanging fruit, easy to go after, easy collection. The highest percentage rate of audits are rich people. People don't understand that. They have the highest rate of return or highest return audit percentage. Obviously, there's less millionaires, obviously, than people that are making 50 grand, but from a percentage standpoint, their tax returns do get audited the most. What are some of the areas the IRS was looking at? It's privilege transactions, and again, it's valuation. And this is all through the SBSE. Just to be super clear and add more substance to this, there's no separate IRA audit division. Okay, so there's no IRA audit division that those agents are just trained, educated, and exclusively focused on IRAs, self-directed IRAs. Doesn't exist. Okay, you have SEPs and Simple through the Trust and Estates division, tax-exempt government entity division. You have individual IRAs on the SBSE. Most audits come through the individual return. So they're going to look at Joe's return and they may ask an IRA question. From my experience, most of the people that are asking IRA questions are people over the age of 72. Why? Because it's valuation on required minimum distributions. That is a direct potential tax implication to the IRS. So if you're an SBS agent, you're trained automatically. If the individual you're auditing is over the age of 72, you're going to ask what the IRA is investing in. And if they say real estate, you may probe further and make sure that that asset's properly valued. If you're under 72, valuation doesn't mean anything because there's no required distribution. Then you have to start asking prohibited transactions. And we know most prohibited transactions are gray, right? It's very rare that someone just buys a house and lives in it or does a straight up, prohibited transaction where they just take IRA money and buy themselves a car or a watch. I mean, so when the IRS probes and asks questions on IRA transactions, there's gray stuff like, hey, I invested in a company, I own 40% or 20%. The IRS agent can say, okay, you're good. Or if they probe further, and let's say they want to pursue, it's going to take time. There's no guarantee that $1 of spend will turn to $10 of revenue. There's discovery. It's facts and circumstances. The law is not certain. There's case law. There's different statutory exemptions, right? And there's different precedents. So it's much harder to go after someone in the privilege transaction world because of the facts are so important to the case. Another important issue is statute limitation. Currently 3-year statute, they can go to 6 if they can show at least a 20% substantial understatement penalty. With IRAs, it's harder. If you have 50 grand IRA, prohibited transaction, the tax on that maybe is 10, 15 grand. That has to be at least 20% or more of the understatement on the tax. And that's harder to pursue. So generally it's a 3-year statute. And a lot of times, they just don't have the chance to go after people. So, it's difficult. They've said, and this is all the 2020, January 2020 GAO report, Government Accountability Office report on self-directed IRAs. They said it, listen, it's hard to detect IRAs for audit. It's case by case. They don't have any audit programs. And again, there's no specific audit division. So in summation, if you look at all this in the totality, excuse me, 80 billion of new IRS money will trickle in over the next several years. They're going to hire 30,000 new agents. 57% will be on enforcement. How much of that will be on IRAs? Not a lot. There will be a lot of money going to SBSE. They will be looking at more tax returns. So indirectly, yes, more taxpayers maybe ask questions on their IRA, but a specific focus on self-directed IRAs, I don't see that happening just because they were very clear and fair in their assessment that, hey, we're talking about a small community. Just so you know, from 2012 to 2016, they only audited 26,000 returns with IRA issues. So in 12, 13, 14, 15, 16, right? 5 years, 26,000 returns, but 5,000 returns a year out of hundreds of millions of returns. So it's a very, very, very small percentage. Okay. And this is SPSE, so it's not just an IRA returns. They're going after IRA issues in 1040s, right? Which hundreds of millions of taxpayers file 1040s. So we're not talking a huge number of people, and I wouldn't be very worried about increased audit risks for individuals. So actually, there's about 75 million or so taxpayers that filed federal tax returns. Actually, this is self-prepared. Sorry, there's 250 million returns filed, approximately of 1040. So they audited over 5 years, 26,000 for IRA issues, 5,000 a year out of 230 or 40 million returns. So nothing. And the reason is they know, honestly, they can't collect a lot of money. If they can't collect a lot of money, they're not going to waste their time on audits. And it's the bottom line, because they know a couple million IRAs, self-directed IRAs, the percentage of people doing really bad stuff is pretty minute. And to go after nail people and have to spend time and money arguing facts and case law and precedent, maybe to get 20, 30 grand in taxes, it's not worth it, right? If the average IRA is, let's say, 120 grand, and let's say the tax rate on that, maybe the average person 25%, maybe a 10% penalty. So maybe 30 grand in taxes. You got to catch the person. You're going to have to spend time on depositions and discovery. It's not worth it. It's easier to just go after someone who took an excess deduction, a small company, a big company, an individual, and just get them to pay 10, 15 grand like that, versus facts and circumstances where the law is not as settled as individual or partnership or corporate tax rules on income deduction. So that is it. I wouldn't stress out. Yeah, there's going to be a lot more agents floating around, but not as much as you think. Not 87,000. There's probably going to be net 30,000 or so. And honestly, they're just not trained or educated on self-directed IRAs. They'll be educated on individual and corporate and partnership tax rules, yes, but not on self-directed IRAs. So I wouldn't lose sleep over having your IRA overly scrutinized over the next 10 years. Maybe a little bit more, very slightly, but nothing significant. So thanks for listening. If you're watching on YouTube, really appreciate it. Don't forget to subscribe. It's a great channel. Really proud of the channel. Drop 3 to 4 videos, a live video every Wednesday, 12 Eastern Standard. But if you subscribe, you'll get notified, because I sometimes go live on different days, different times. Keep it spicy. And 3 podcasts. This one drops every Tuesday. Adam Talks every Wednesday, and Ad Mail every Thursday. So definitely, if you're into self-directed retirement topics, we got you covered. So check it out. Otherwise, thanks for spending some time with me today. Have a great rest of your day, and take care.